Monaco 64, home of alternative economics and contrarian views. So today we're going to look at a company that will be immune from cost pressures in the continuing inflationary 2020s, but will provide optimum leverage to the gold price. And before we go any further, I just wanted to clarify that this report is for marketing and informational purposes and does not constitute financial advice. Even though oil and other commodities have corrected of late, tomorrow core CPI is expected to drop from 6% in May to 5.8% in June, and the Fed tightening stance is set to continue for the foreseeable future. We are seeing signals that the credit-driven US economy is slowing down. The Treasury yield curve, for example, measured as per the spread between the 2 and 10-year, inverted last week, and advanced Q2 or second quarter GDP could confirm a technical recession or 2 consecutive quarters of negative GDP growth on the 28th of July. So in a debt-based fiat currency economic system driven by consumption and borrowing, the Fed will be aware that there will come a point where they will have to refill the punch bowl, so to speak, unless they want the party to end. And the party, of course, is the economy. A small drop in the core CPI in the next few months after the recent commodity correction could give the Fed the perfect excuse to stop emptying the punch bowl and even think about refilling it. When that happens, we expect asset prices to rebound, and especially commodities, including gold, as we don't think the high inflationary environment is anywhere near being over. We think we are in the early 1970s in terms of the inflationary path. And even in the 1970s, there were some moments when CPI tapered. But it wasn't until 1981 that it topped for good after Paul Volcker let rates rise to 20%. Despite talks about doing a Volcker, we don't think Chairman Powell could do so, as the federal debt burden is now 130% of GDP, while in 1980 it was 35.4%. And not to mention, of course, the quadrillion plus in derivatives notional exposure in the financial system. So by now you must be wondering what this company that will weather inflationary cost pressures and provide optimum leverage to the gold price is. While the company is Gold Royalty Corp, its symbol is GROY, and it is listed on the NYSE American Exchange. So first we'll go over what a royalty or streaming company is. Well, it is a specialized financier that helps fund exploration and production projects for cash-strapped mining companies. In return, the company receives royalties on whatever the project produces or rights to a stream, an agreed upon amount of gold, silver, or other precious metals. Royalty companies generate revenues in times when the price of gold or other precious metals is both rising and falling. It is part of what makes them attractive. They have less reliance on debt. They have a high revenue per employee. Royalty and streaming provides an attractive business model to gain exposure to the gold price. By avoiding production costs, royalty companies can have high margins and strong cash flows. So now we will look at the people behind Gold Royalty Corp. Well, the founder is Amir Adnani. He also founded the sister company of Gold Royalty Corp, Uranium Royalty Corp. The CEO of Gold Royalty is David Garofalo, who was CEO of Gold Corp when it merged with Newmont a couple of years ago in a $32 billion deal, which is the largest corporate merger in gold industry history. The founder of Gold Corp, Ian Telfer, is chairman of the advisory board of Gold Royalty. After the current 2022 crash, not only in the general stock market, but in the miners as well, Gold Royalty is trading around half of its IPO price of $5 in March 2021. In the IPO round, self-made billionaire Eric Sprott, self-made billionaire Rob McEwen, one of the best gold entrepreneurs ever, and other big institutions participated and put millions of their own money at risk. Some of them have 3-year lockups. As you can see here, Gold Royalty has a lot of room to grow in the royalty sector compared to the other existing royalty companies. It has also acquired over 170 royalties in the past 12 months. It raised $90 million in March 2021 in its IPO on the NYSE American Exchange. Moving forward, it has robust revenue growth with around 60% CAGR, or compound annual growth rate. So here you can see a summary of Gold Royalty's portfolio. Its properties are anchored in the best mining jurisdictions in the world. You can see that it has a total of 198 royalties. 8 of them are already producing assets. 20 are royalties on assets in development. 30 are in advanced exploration royalties. And 140 are in early stage exploration royalties. And as you can see, they have some premier operating partners like Newmont, Gold Mining, Barrick, Nevada Gold Mines, and many others. Gold Royalty is one of the most liquid stocks in the streaming and royalty sector, as you can see here. To wrap up, we're going to look at some comments that the CEO, David Garofalo, made on Commodity TV in April of this year. Commodity TV asked him this question. After building 15 mining companies, why the royalty sector? And the CEO, Garofalo, said one word: inflation. He sees a rapidly accelerating inflationary cycle, and so mining companies will not be immune to cost pressures. And this is what he added: royalty or streaming is the best place to get optimum leverage to the gold price. You get the upside to the gold price, the upside to mining success, and complete insulation from cost inflation. And this is what the CEO, Garofalo, said about the balance sheet and the capital structure of Gold Royalty. And I quote, "We have a pristine capital structure. We have no debt outstanding, and we raised $90 million on the strength of the 14 initial royalties in our IPO of March 2021. And we used some of that to acquire royalties and diversify royalty portfolio significantly. And we still retain $50 million of liquidity available on the balance sheet." David Garofalo goes on to say that he thinks that Gold Royalty can ultimately achieve a market cap of $5 billion through their consolidation efforts. And one of the interesting things he said that shows me that Gold Royalty is in this business for the long term is the following. He said that Gold Royalty should have a continued pipeline of royalties contributing cash flows for many generations. So I thought that was interesting. If you want to learn more about this company, go to the description of this report and click on the link to their website. With that, I wish you all a great day. Take care. Bye.